think the economic data is definitely part of this, where you've seen its surprise on the upside, across different regions in Asia, globally, where PMIs have improved quite a bit from the bottom in April. So we are definitely seeing economic data provide that support to the market, but there is an amount of retail participation that has increased pretty much in every market that we track here in Asia. And especially you can see that very clearly in markets like Korea and Taiwan, where retail participation has jumped like 20 points from what used to be the typical average. So this brings into question, and on a day like this, you have to ask this question whether there are signs of, exuberance or overheating in the market. And for the most part, the answer that we come up with is mostly no. And if you look at macro, if you look at economic data, if you look at valuations, sentiment, positioning, flows, and even retail exuberance, it's nowhere near record highs. Just to give you an example, you can look at the China-Asia market, and the margin lending there tends to be a very good indicator of retail optimism, and definitely it's increased in recent weeks. But if you compare it to the levels in 2015, it's nowhere even close.
And Mixo, when it comes to where there is opportunity, if you combine macro fundamentals and value, it's China. All roads lead to China, apparently, in this equity market environment. Is that the case?
That's partly true. So if you look at our framework for selecting country preferences, we combine that with some COVID information. So, how countries are doing and dealing with the COVID spread, as well as how they are doing in terms of reopening their economies. And when you look at the results, the most favorable markets to us are China, Asia, and Taiwan, followed by China, like MSCI China, as well as Korea. So it's pretty much more focused on North Asia versus South and Southeast Asia right now. And I do think that investors are also seeing it that way. So in our medium-term portfolios and even in our tactical picks, the stocks exposure is definitely very, very focused on North Asia at this point.
And Mixo, mainland Chinese index is looking particularly robust today. If there have been any international investors just holding on the sidelines but wanting to leap in now, what strategy should they employ for mainland equities?
Right. So if you look at what's been going on in the markets in the near term, we are seeing a very strong value rally over the last couple of days. So cyclicals have done well really since the March 23rd bottom in the market. And, across different markets, we've seen cyclicals do quite well. But value was kind of lagging, especially in China and in Taiwan. And what we've seen in the last couple of days is that we are starting to see a very strong surge in property names, in brokers, in insurance, in banks as well, which are stocks that have kind of lagged this rally since the March bottom. And these are starting to catch up. And I would say that there's still a lot of room for these to catch up. If you look at from a valuation perspective, the gap between momentum and value is at record highs. If you look at positioning in our prime brokerage data for JPMorgan, we find that positioning in sectors like healthcare, staples, and tech are close to record highs, whereas all the value and cyclical sectors positioning is record lows. So for institutional investors, definitely there's a lot of room to catch up in these stocks, and I would expect that in the near term they continue to do well. So if you look at our recommended positioning, we break it down into medium-term exposure, which is more focused on growth and quality kind of areas, and more tactical exposure, which has a very, very strong value cyclical flavor to it right now.